Hi guys, Jared here with Day Traders FX. Let's have a look at some of the setups coming into this Asian session and into the coming UK session. And remember that tomorrow is non-farm payroll, so we've got some big activity expected during that. But there should be some good setups, a couple of good trades we can get into before all of that. So let's have a look at what those are. You can see overall the markets were pretty negative today, except for oil. Oil did okay and kind of holding its own, but Dow closed about 50 points down. Actually, gold I guess was up a little bit, but everything else was kind of having a bit of a hard run today. So keep that in mind. About 1 hour from now, we have the Australian PPI. So just if you're looking at any Aussie trades, Aussie yen, Aussie dollar, anything like that, just make sure you're keeping an eye on that PPI. Isn't typically a huge mover, but definitely can be. So watch the Chinese manufacturing PMI and the Aussie PPI. Those would be good to keep an eye on. And then, of course, before non-farm, we have the manufacturing PMI for the UK as well. That'll be worth keeping an eye on. And then we have non-farm payroll and the ISM manufacturing PMI for the US. So it's all the manufacturing PMIs and PPIs and so on coming out in the next several hours. So that's going to be some big movement. But of course, all the yen pairs and all of the dollar pairs will react to non-farm payroll. So that pretty much only leaves a few pairs that don't have something yen or something dollar in them. So keep in mind this is going to be a big mover for most of the currencies coming up. Okay, quick little look at the dollar. We have a couple of missed pivots. Well, I guess we only have about one missed pivot, and that's down here for yesterday. And that's down right around 134.70, we'll say. I will be surprised if we get there. Now, we may get there with non-farm payroll tomorrow. You never know, but so far that's a little ways away. 135.00 is a great little support as well. That would be a great area. I would be a buyer right around that general area, 135.00. But at this point, the euro dollar, we don't have any particular candlestick patterns to lead us to believe that there's going to be some big reversals to the downside. And I'm really, with trend that we're starting to see really develop, I'm really more interested in buying on the dips. And so there is some sell side interest here. If we get a break of this trend line, we might be able to get down towards that 135.00, but this is going to be a toughie. And again, I'm not super anxious to trade against the trend, but watch this trend line. If we do get a break below that, get some stops above these highs and work your way towards 135, 135.50 probably first of all, and then ultimately 135.00. But I think these lower levels, 135.00 and the daily pivot down here at 134.70, are probably going to get reached as non-farm payrolls news comes out. So just kind of keep that in mind. So again, I'm not really ready to do too much except for look for buying opportunities around 135.00 and even a little bit below. So far, it's there is some shorts that could be entered here, but they're going to be high risk, and I wouldn't hugely recommend them. But there's opportunity. As far as the pound dollar goes, the pound dollar has done something interesting in that it's run down very nicely. We had a nice little reversal pattern down here, and it's back up above this main resistance, which was strong support, right around 158, really about 158.25, give or take. And you can see that we've got a good little distance before that 200-day moving average, about 80 pips or so. And we've got this interesting little setup on the 4-hour chart. Pound dollar has run down nicely, and it looks like it's in a nice little downtrend, and we're just kind of experiencing some retracement, which appears to be the case. Now remember the setup that I talk about. We've had this trendline breakout right here, and it's broken out nicely, and here we go. We're back up above the weekly pivot. We filled in the gap. A lot of good things there. And now what I'm looking for is this. I'm looking for the fact that this has been able to kind of open and close above the 23% fib and kind of clear that level. Our next target is going to be this 159.40-50 area. We have weekly resistance right there. We have a 200-day moving average, and we have the 38% fib. Now remember, when we're able to kind of clear this 23%, we have such a high probability of making it into that 38% that it's worth trading more often than not, and that's exactly where we are. We're above that 23. We have a very good chance of running into that 38, which again is about 90 plus pips away. So stops, we want to make sure we can stay above the 23% fib, which at this point is right around 158, 35.40 area. So we want to make sure we can stay above that. and work our way up into there. So what I'm looking at is possibly buying a little bit on the dip, seeing if I can get some retracement down to this daily pivot, which is right around 158.35 or so, and then buying off of that in an attempt to reach 159.40-50 area. So it really gives us a nice 100 pip run. So I'm looking to basically buy off this daily pivot, go long here to the 38% fib, which is up there again at about 159.50. So that's what I'm looking for, and we'll see how that goes. We'll see where it goes on that. Aussie dollar looks like it's putting in a nice little bottom here. We've got a great little, we have a great little double bottom right here where it's really found some good support, and here it is working its way back up again. We have some missed pivots back here. We can almost count those as being hit as this little dip here, but there's definitely some room to some upside movement here. I'm just kind of looking at a couple of trend lines and a couple of things. Keep in mind this double bottom continues to happen at the 200-day moving average. So here we are, 200-day moving average. We've had another double bottom. A couple of them back in through here, and so this little guy right here looks like, at least for the moment, pretty good support in a pretty good area to potentially be buying against. So what we see right here is probably 40 to 50 pip stops and targets of back up into this trend line. I think we have 50 to 100 pip targets on the upside buying against this 103 75 80 area, so that's where stops would need to be below about 103 75 80, but I think we have a good chance of trading against that. Now remember, we have a little bit of Aussie news coming out, and then we have big US news tomorrow, and so just really keep this double bottom, keep this level in mind as we go. And once again, let's just write that down so you guys can make sure to kind of get that and watch that. I'm going to say 103.80 is going to be the level to watch. So a break of that will be very significant and very bearish. However, holding this level is very bullish. So and a double bottom at a major existing support is never something to overlook. So let's make sure we're prepared for that. Yen pairs continue on running. They're making their way up there. Not doing too much on the yen right this moment. We'll see how those go. We'll talk about those during the live non-farm payroll session tomorrow, which once again everybody is invited to. The link is in your inbox, and it's also in Twitter. So just have a look there, and you'll see all of that. Here's one thing I'm looking at on the dollar Swiss franc. Look at this support down here. This is right about 90.80. I'm gonna say 90.80. We'll just say 90.80, which is generally where this support is, and this is turning out to be quite an interesting little level. We've seen that the pair has tested this level a couple of times, had a heck of a time back here, did end up getting a little tiny bit lower, but tons of consolidation, tons of support right there. And if we go all the way back to 2011, we saw that it got a little bit below and above and so on and so forth. So it looks like we're going to have some interesting stuff going on here. A break of this level, which we could very easily see could really spawn some good downside movement. However, a break or a bounce off this with some nice, candles that give us the typical reversal pattern could be very significant as well. And so far on the 4-hour chart, we don't see anything too crazy just yet. We have a nice big bearish candle there, and we are bouncing off that support initially. But let's look for a break of that and see if we can actually get through and get below that. We have a nice little hammer that kind of turned things around, but that could very likely be a nice little break. So keep an eye on that. Remember that we do have some short-term levels to keep an eye on. We've got a missed daily pivot back here, which was missed by over 20 pips, so that's definitely worth keeping an eye on. And let's look to trade up towards that, but keeping in mind that we've got big support down there that could break. So those are the couple of things I'm looking at right now. So far so good. Let's see where all these go and how they go. Let me know if you have any questions, comments, and we will plan on seeing you all in the daily wrap-up session a little bit later on today, and then in the live non-farm payroll session tomorrow, which again is on Twitter and should be in your inbox if you're part of my emailing list. Thanks a bunch, everybody. I'll see you in the chat, and take care.